Hey traders, in today's video, I'm going to show you how I take different elements of technical analysis and put them together in order to find a high probability trading opportunity for the week ahead. Hey guys, Akil here, and welcome back to another Forex market preview video. If you are one of the 105,000 plus subscribers that support us here on YouTube, I just want to say a big thank you. Never did I think we would reach this milestone, but we have, and it's all due to putting out consistent quality content and you guys sharing it, spreading the word, and just supporting what we do here. So everything you guys do is appreciated. I just want to take a second to let you know that. If you are new and perhaps this is your first time stumbling across this channel, what we do here is we give you a weekly video sharing with you a few of the trading opportunities that I'm looking at for the week ahead. Hopefully giving you some tips that can help you make some money in the market next week, but more importantly, giving you some tips on how you can become an independent, consistently profitable trader. YouTube is the internet in general, I guess, is a very scary place to find trading content. There's some very, very, very good content there. There's even more bad content there. So hopefully we make our way into your good content list. And if you like what you see, you'll become a subscriber as well. Also, if you do like this type of video, I recommend checking out our syndicate program. It's $1 for a 30-day trial. Essentially, it's a Forex market preview brought to you every single day as trading coach Jason Greystone and myself share with you on a daily basis our top trading ideas for the day. Speaking of the syndicate, we've been on an amazing hot streak as of late, and we're getting some pretty cool emails. I had a few traders that shot an email saying, "Hey Akil, I've already used your trading ideas, not a signal service, but some of these traders, they look for the same things that we do, but they've already used the trading ideas that we've shot through the trade floor and that we've shown to them in War Room or in our syndicate update videos to pay for their annual subscription." So that's always cool to see the investment already pay for itself, and everything else after that is just pure profit. But today we're going to take a look at the pound yen. I'm going to show you a few different elements of technical analysis, meaning a few different techniques that I use and how we can really put them together to find a trading opportunity that looks pretty appetizing. All right, so the pound yen has been an interesting pair as of late. Let me just delete some of the drawing tools that I have here. It's been in a sort of a nosedive, and that's due to a couple of reasons. About a week ago, we had some disappointing news from the pound on its monetary policy. I think there was the market was expecting a very hawkish tone in the bank statement, and they didn't receive that, and that was met with weakness for the pound. And then recently we've also seen a lot of strength in the yen, and that's just due to kind of the war talk that's going on between us here in the US and them over there in North Korea. Typically the yen is one of the safe haven pairs, so when there's a little bit of fear going on with the dollar, money typically flocks to the yen, and along with a few other currency pairs as well. But that combination of the dovish tone from the pound and the strength of the yen has sent this pair in essentially a nosedive from about 146.48 all the way down to about 141.70s. And this is a pair that we've been watching in the syndicate last week. We just haven't had an opportunity to get involved. Well, we had one opportunity. We didn't have an opportunity to get involved in the bigger move, right? So earlier in the week, we were watching this structure level right here around right above 144. So let's just call it 144 even. Price action was coming down, right? We put in a falling channel right here, and we're waiting to see what would happen at this previous level of structure. Again, look left, structure leaves clues. You have some support right here. Market consolidates right around that level as well. And we can keep looking left in the past. We can see support, resistance, resistance. And one of two things were going to happen at that level. Either we were going to see a hold, and that would allow us to predict a move that would continue back higher, or we were going to see a break below, close below. And we said to our syndicate members in the war room that if we see a break of this level, we can expect kind of the floodgates to open and for this pair to really dump all the way down to about 142.50s. And you can see that's exactly where price action traveled before we found a little bit of relief. Now, I know what you're saying, great call, but guess what? We had no opportunity to get involved because the move was so quick, and because of the style that we trade where we don't trade breakouts, we wait for retracements. We didn't have a chance to get involved in this move. We did, however, have a chance to get involved in this move right here. So picking an area where the market would run out of steam, see a little bit of relief, and we were able to get a nice little counter trend trade move right here from 142s, 142.50s. Now, as you can see, since then, price action has created an outside return and another lower low, lower close, right? Very similar to the move we saw before that. So what we're looking for now is another leg to the downside. So another bearish continuation, another bearish extension, a little bit lower down to about, 140.50s, anywhere about about 140.50s is the next level that I'd have on my radar. I think a little bit higher than that, 140.75s. But anyway, we talk about that later. But so the question is, right, we've identified the lower low, lower close, the break below, close below. We've predicted that we're anticipating a continuation downward. The next level of that prediction is not only where are we likely to go or what direction is the market likely to go in, but how are we likely to get there? And what I'll be looking for this coming week is a chance to sell the retracement. So I'm going to go one more time frame lower to my hourly chart here. And you can see that as price came down, we've sort of settled a little bit. We've come down, we've put in a slight lower low, lower close, then we've consolidated around this level before finally putting in, right, a move higher, right? Breaking our previous structure highs. Now, this is actually a sign of a bullish move, but it's important to understand that although this is a sign for a bullish move on this particular time frame, this bullish move could just be part of a retracement on a higher time frame. And if that's confusing, don't worry about it. That is probably the number one question I get from clients that I work with. One of the first things we teach in our training courses is how to read a price chart, how to identify a trend. And one of the hardest things for traders to understand is that the market moves in fractals, meaning there are trends within trends within trends. So although there may be a bullish trend on a lower time frame, that bullish trend may only be an outside return, a pullback on a higher time frame, which is still in a bearish trend. And so again, not simple stuff, especially if you're new. It's not simple stuff. It's just something you need to train and know how to recognize. But what I would be expecting here is a potential bullish move that's going to set me up for the next bearish move. Good job, Akil. You just made it even more confusing. But let me draw it out. I'll show you exactly what I mean. So we have the higher high, higher close above previous structure right here. I'm going to just switch my line up a little bit. Boom. So we have the higher high, higher close right there above previous structure. Now, at this point, it's too early to tell where this bearish move is going to run out or where this bullish move is going to run out of steam at. But let's say that we do put in a retracement, let's say back to retest these highs. You can see the wicks right here, the doji candle right here, right? If we put in an equal measured move, so a secondary equal measured move, that's going to line us up right at a level coming up to about 142.60s, all right? So a one-to-one measured move. This would be considered a complex pullback, so a multiple-legged retracement. This is something that the market likes to do to try to trick traders to think we're going in the opposite direction, think that we have a rotation and trend, and then boom, it continues on its way. For you guys that are Elliott wave enthusiasts, this is the ABCD pattern that comes after the end of your fifth wave, right? Think about it like that. So I've got my one-to-one measured move here, this ABCD pattern. Let's actually just write this out here. We're going to make this RA. Caps lock. There we go. Make this RA. make this RB, make this RC, and we're gonna make this RD. Oh, here we go. Come on, baby. There we go. Make this RD up here. So the question is, what else can I add to that? Well, this is where I want to bring on my Fibonacci ratios, and I have a few tools that I can use for that. I can use my Fibonacci extension tool, first and foremost, if I can find it. There we go. And I can take the Fibonacci extension from my swing low, my A leg, to my swing high, here my B leg, and back down. And you can see that I'm going to get a 1618 Fibonacci extension completing right at the same area as that 1-to-1 measured move. Now, if I take my next Fibonacci tool, my Fibonacci retracement tool, and I drag it from my swing high up here to my swing low down here, you're going to see that I have a 618 Fibonacci retracement in that same level as well. So not only do I have the 1-to-1 measured move, the ABCD pattern completion, projected ABCD pattern completion, but I've got two Fibonacci levels lining up at that same price point, the 1618 and the 618. And these are what's called the golden mean, or the golden ratios, for you guys that understand Fibonacci's, which essentially means the 618 and the 1618 are the most powerful Fibonacci levels out there. Doesn't mean this opportunity is going to work. Don't make that assumption, right? By saying, oh, they're the most powerful level, so this magical Fibonacci has to work. It doesn't work like that. But what we're doing is we're adding clues, right? We're building a case for entry, is what we like to call it, where we take different elements of technical analysis, we put them together, and when you have all those clues pointing in the same direction, we can find some pretty good trading opportunities. Now, there's one more clue. Many of you are probably shouting it into your screen right now, especially if you've been following us for a while. You're saying, Akil, look left, you gotta look left, because if you look left, what leaves clues? Structure, right? So we just take a line right here and we look left from this same level, this 142.60 level. Look left, previous level of structure support right here. Look lefter, previous level of structure support right here, an actual double bottom. This is where, again, we originally took the trade this past week on the syndicate and made a few bucks on the way up. And if we look leftist, right, we'll have to go out to a longer time frame, but we mentioned before how this 142.50 level was a nice level in the market. So essentially, it's an area in the market, a price level in the market that was once previous structure support recently, has now been penetrated and broken, and has become previous structure resistance. There's actually a nice story. Do I want to? Whatever. It's my video. We can go as long as we want. A cool story about this opportunity right here. So we took the trade here in the syndicate earlier in the week. Made some profit, didn't get the extended targets, or didn't get the initial targets hit, but made some profit because we're actively trailing this trade. So I made about 20 pips, was shooting for about 100 something. It just didn't work out, but I was able to get something out of the trade, which was good. We came back the next day and price had came right back down to this level. And we had a lot of traders in our live room screaming, triple bottom, Keel, you got to buy it. And it gave me a chance to explain something that I learned during my trading journey. And if you guys are new, I don't claim to be the best trader out there. I don't think you've ever heard me say that. I'm not a trader that's making $1 million a day, or I'm no Warren Buffett. I'm a good trader. But one of the reasons I've become a good coach is because I've worked my way up really from being a really bad trader to being a consistently profitable trader. And when you go through that journey, you experience a lot of setbacks. You know, it's one step forward, two steps back a lot of the time. And the best traders learn from their experiences. And what I love about my story now, although most of it is embarrassing, many of those mistakes that I made, it gives me the opportunity to teach and give the traders that I work with a heads up on, hey, you may want to keep an eye out for this. You may not want to do that. You may want to look here, which allows them not to make as many mistakes as I did. But a long time ago, I used to have the theory that the more times that a level of structure is tested, the better it is, right? So a double bottom is better, more powerful than a V bottom, right? A triple bottom is more powerful than a double bottom. A quadruple bottom is more powerful than a triple bottom, and so on and so forth. Right? Because that structure level, the structure level is so powerful. It keeps holding, it keeps holding, it keeps holding. The more it holds, the more powerful it is. And years of making donations to the market, aka losing money with that thought process, I realized it's actually the complete opposite. The more times the level is tested, the weaker that level is. So when we come down here to test this level for the third time, instead of getting the signal like I did in the past of, hey, this is even more powerful, it actually sent off a warning signal in my head saying, Akil, you don't want to involve yourself in this trade again. You already made some money off of it. You don't want to blow it taking this type of trade. And it's so tough for traders to do that for a few reasons. One reason is maybe they made some money, the market didn't go where they expected to go, and their pride or their ego is a little bit hurt. So immediately they see the next opportunity, they want to get involved because they want to make up for the money that's lost. You can say the same thing for a trader that maybe never had a chance to enter this trade. This was a tough one because we entered it and went directly against us for a little bit before retracing up. And there were a lot of traders that were scared to get involved because of that sharp movement down. And you get those traders that missed out on some profits and now they're like, well, I want to get involved in the move. I need to be involved in the move. And you just don't want to get those beer goggles. And beer goggles, that's a term where it's like, you go to the bar and you have a few drinks and things or people start looking more attractive than they really are in real life. And then, sometimes, one thing may lead to another. You don't make the best decisions. You wake up in the morning, you're like, oh, whoa, that's what you look like when I'm sober, or that's, probably offended a whole bunch of people here, but you don't want to get that in the market where you're so blinded by these other emotional factors that you don't see the opportunity, or in this case, the red flag for what it is, and you end up entering it. It ends up blowing you out the water. And then in hindsight, you're like, oh, dummy, why did I enter that? So good lesson about this again, we especially during the summer when time slows up, we talk about a lot of stuff in our live trading room. So always some good points there. So anyway, I rant. It's my video. I can do what I want. So hopefully you enjoyed it. What I'll be looking for is a move up to this 142.60 levels. Now there's a few ways you can take advantage of it. We're not going to go into all of those details right now because I'm already pretty deep into this video. But essentially, the safest place to put your stop loss, and again, this is going to vary depending on what entry reason you look to take the trade. In fact, go back and watch a few videos on trend continuation trading, and it talks about sort of the different ways to get involved. But essentially, stops, the safest place for stops are going to be above this level 143.33s, and you'd be looking for a retest of previous structure lows with your first targets, and your second targets with that continuation down to the lower level that we talked about. Now, very important, if this was a lot for you, if you are new and maybe you're feeling a little bit overwhelmed, maybe a little bit discouraged because you're saying, hey, Akil, there's no way I can possibly remember all that. Please don't. You got to understand, trading is a process. And that's why, when we do our training courses, we break it down one step at a time. So you don't come into the door doing all of this stuff. You learn how to read a price chart. You learn how to identify structure. You learn the ABCD pattern. You learn how to draw Fibonacci's, right? You learn all of this stuff individually because it's a lot easier that way. And then you put it together, right? So I don't want you guys being overwhelmed, thinking too much about the big picture and thinking that, Akil, I'll never get it. And that actually reminds me of an article I read earlier today. This will be the last rant, I promise, and I'll let you guys go. But I read an article today by Gary Vaynerchuk called How Successful People Think. And there was a good quote on there that said, every 22-year-old wants me to tell them exactly what to do. Nope, that's the wrong one. Which one was it? Let me see if I can bring up my Twitter again. Hold on. That was a good quote too. It was something about the micro and the macro. Where was it? There it goes. This one. He said, everyone reading this is so worried about their years. And this is talking about success in general. Everyone reading this is so worried about their years while continuing to waste their days. It's all execution. You have to do. You have to move insanely fast in the micro, which is short period, and be insanely patient in the macro. And I think that's something that gets a lot of traders into trouble. They spend all this time thinking about the bigger goal. I got a message from a guy the other day saying, "Hey, Akil, right? How would I need to distribute my money when I end up making $250,000 a day in the market?" And I'm like, why are you thinking about that? Why are you thinking that'd be great if you get there, but why are you thinking about that long-term goal? Why are you spending so much time thinking about what you're going to do when you're a successful trader, but spending no time acting on what it takes to become a successful trader? So, don't spend a lot of time thinking about the big picture. I know you probably don't hear this a lot from a lot of people, but the big picture tends to work itself out, right? I didn't plan on managing money. I didn't plan on being a teacher. It worked itself out when I got good at trading, right? So don't spend time thinking about or developing this massive plan for 10 years down the road, right? Spend that time that you would be using developing that master plan. Spend that time on taking action and doing something to get you started right now, right? That's the best thing you can do. Learn how to trade right now, right? Do something to get you on that path. Then as you go on that path, right, your future will open up for you. And that's what I urge a lot of you guys to do, right? Take some type of action. You've started already by watching this video and staying with me all the way to the end, but take the next step, whether it's going over to our website and watching the free training lessons. We have thousands of dollars worth of free workshops and free training lessons, right? Maybe it's going over there and dedicating a few hours to watching that and learning. Maybe it's taking the next step and joining the syndicate program and saying, hey, I'm going to put myself in a position for a month, or I'm going to spend $1 to put myself in a position for a month where I can watch 2 professional traders operate each and every day. Maybe it doesn't work out. Maybe their teaching style doesn't match the way I want to teach. Maybe I don't have a passion for trading, but you took action and you put yourself in that position to succeed, and you never know where that path will lead you. Maybe it'll lead you to making some money in the market based off our ideas, even though you shouldn't be trading if you don't have a trading plan. Disclaimer, right? Maybe it opens up the door to, hey, you taking a trading course and really learning how to learn. That was me, right? I spent time in a live room with Jason Stapleton, and then one day after that I said, shoot, let's do it. Let's sign up for the full course. Had no idea where it was going to take me, had no idea what I was going to do with it, but it put me on a successful path. Took some time, some bumps in the road, but I became successful. I was able to open up a money management business, and I'm able to teach traders and do something I love and share that knowledge with you guys now. So again, spend that energy that you would have dreaming, getting those dreams to work, right? Starting on those dreams. And that means taking action no matter what it may be. And the rest will figure itself out. Trust me, success seems to work like that. Getting lucky seems to work like that. It seems to work itself out if you're taking actions. So thank you guys for joining me. 2 rants today, a little bit of analysis, but I hope you guys enjoyed it. Do me a favor if you did, just leave me a comment. I love reading the nice comments. Also share this video with maybe a trading friend of yours as well, right? Spread the word, spread the word. I think we're preaching the right message here at Trade Empowered. I know not everyone likes it. But for those type of people, those aren't the traders we want to work with anyway. So we want to develop this nice group of traders with the same mindset and really just help each other out, support our peers in the markets. So if you guys do that, I will be back next week for another Forex market preview video. And until then, plan your trade, trade your plan. You guys have a great weekend. Love the Everton blue, right? Welcome back, Wayne Rooney. Welcome back. All right, traders. So I hope you enjoyed today's video. And if you did, please show us by hitting that like button and subscribing by clicking the button right below. If you're looking for more educational content, feel free to head over to our tradeempowered.com website, or also take a look and you'll see more videos available for you. Have a good one.